Wait, I'm not seeing your screen, Matt, but we're live on YouTube.
I love it when we do this. It's my
I do
favorite.
too. It's so fun.
Yeah, bring your screen up. And that means we are live on YouTube and Tackle Trading's halftime report. We've got Matt, we've got Tim, we've got Cody. We're going to have a fun show. We've got a lot to do here today. Delta Tuesday, Matt. And I think, about a year ago when we started this halftime report. In fact, Cody, I want you to look up the anniversary date of the first halftime report. I think we might have either hit it.
Yeah, I was thinking, I think we're getting close or we might have passed it.
Yeah. It was July.
Was it June or July?
Man, I don't know. We might have already passed it. I'm not sure. I know.
I think it was July.
We did the first week on Facebook, remember?
Yeah, we hated that.
Yeah, we did. And then we moved over here to YouTube. And
we
we're
like
about that 1 year mark. But anyway, Matt, I remember when we were first designing and talking about this show, what we wanted to do is every day had a theme. And Tuesday is Delta Tuesday. Delta is a concept in the market that describes how you make money going up or down, either bullish or bearish, and there's different systems. What do you love about Delta trading, first of all?
First of all, in no other type of trading, when you're talking Delta, Theta, Vega type trading, right? In no other type of trading do you have an open-ended risk graph the way you do with Delta. And what I mean by that is when you're like, take Disney, for example, right? Mm-hmm. If we come over here to the Analyze tab so people understand what I mean by when you say an open-ended risk graph. And we'll talk about the breakout here on Disney just here in a little bit. But take Disney here. Well, if I add, say, if I'm buying a call option on that breakout on Disney, right? And I come down to the 60 Delta type contract and we look at where this risk profile is. Just give me 1 second. Let me increase it so you guys can see the position. So let me take off these other positions. So if we add that call option on Disney, right? And you look at the risk profile here, well, you have this open-ended risk graph where you have the potential to make a tremendous amount of money on leverage. Mm-hmm. Whereas when you're doing something along the lines of, say, a naked put on Disney, and I come down to the 31-day contract and come down to the 20 Delta contract here, and say I sell that put option instead of buying the call option, you have what's called a close-ended risk graph. And because you can only make what you sell. So you get a high probability here on the naked put, lesser probability on the call option. But when you're looking at the call option, you have that open-ended risk graph where you can really, do a significant ROI in a short term. So that's why people love Delta, and that's why people love Delta over Theta, is simply because you can make more money.
Well, and, as a trader, obviously, and I know that you do this and I do this, and, most traders use Delta, Theta, and Vega, if not some combination of all of them there. You can focus on one and just be a Delta trader or a Theta trader or vice versa. But some balance is usually a good approach. I love a couple of setups we've got here today. We're going to be prepping them in terms of directional plays, Matt. Disney's one of them for a breakout, and Ameritrade's another one for a bearish retracement. But first, let's start with the market. Yesterday, we actually hit an all-time high on the S&P 500, but we're stalling. Matt, not a lot of carry through after this G20. Break down the S&P, if you will.
Yeah, technically speaking, we kind of hovered here just yesterday above the breakout channel. Not a lot of price movement from the intraday perspective. When we got done with the halftime report yesterday, you started to see this kind of breakdown out of this support level, kind of close the gap here, and as you can see, it just hit that gap fill from the overnight, and you could call that a common gap. Common gaps occur very frequently in the marketplace, and what a common gap is basically when you get some information overnight, i.e. the G20 coming out on Sunday, and the market gaps up just a tiny bit. A lot of times what it will do is it will fill that gap, and that's kind of what you're seeing here on this nice little common gap. It breaks out, kind of tests that gap out range, and then it holds that gap. And then today's there's not a lot of news out there today. I mean, I was looking at the news as I do every day with in preparation for my trading and certainly for the halftime report as well. And Tim, there was just not a lot of news out there to really kind of fixate on. There's not a lot of corporate news this week because of the fourth coming here on Thursday. There's not a lot of economic news until we get into Friday, with the unemployment report. So, you know, for me, it just feels like the market is kind of taking the vacation a little early here. Is what it really feels like. The only major news that I saw coming out of today, and outside of some international geopolitical central bank news, was NVIDIA, NVDA. Let's, you know, update people on some of the chips here. NVIDIA here announced their new chip, and they're directly competing with AMD. It's a new gaming chip, and I don't know all the parameters around it, but it's priced at $349, $399, $499, and I believe $699 is what the pricing is. Very similar to what AMD has. So they announced their chip, and you would think that on a news announcement like that, you might see a little bit more fanfare. If you remember when AMD announced their new gaming chip in response to Google, you had this type of price movement coming out of that announcement. But with NVIDIA, you really didn't have any of that follow through, and so a little concerning on their announcement here. But you are seeing a little bit of a bullish uptrend. It's going to come down and test those moving averages. So we'll see what type of trigger we can have on NVIDIA coming into the next week. But outside of that, Tim, I mean, we really didn't see any news. The only trade news we saw today was a potential pivot to tariffs coming into Europe, and it wasn't a big number. It was like $4 billion just in response to Airbus is basically what it was. So nothing major from a news perspective today.
You know, obviously, there's not a lot going to be happening in front of a holiday like this. We have seen volatility in front of holidays. We did get one as recent as last Christmas, but very different here in July after the markets have been stable than Christmas Eve when Mnuchin was doing his thing, Matt. The heat maps make me want to look at two different sectors real quick. Give me a look at XLE, if you will. Obviously, a lot of independent oil and gas companies are down. COP, EOG, OXY, PXD. This was the sector that the tackle trading coaches, and, you know, you were kind of going through those last weekend in the scouting report meeting, had as the most bearish sector setups in the market, Matt. They're all flashing bearish to me. What are you seeing in energy?
Well, energy, we ranked it at a 50-yard mark, just given the fact that we're sitting in the middle of the range from this higher high to that lower low. So we ranked it at the 50 simply because you were hitting its head at resistance. But my personal take on crude was it was overstretched, and we were starting to see potential of a K trade type scenario, and that's what you're seeing here on crude today, Tim, with the clipping of that 58 support level. And so now you're starting to see that downward movement in price, and you do have the increased volume on crude. So coming back here to energy, you absolutely see that downward movement in price today that is really on the backs of energy. And OXY specifically, it was a stock we put on one of the scatter reports. And once it clipped underneath this support level right here at 49.30, you saw that trigger to the downside. So that's a pretty good short position. I just felt like crude was a little bit too overstretched in the short term, really kind of consolidating between 58 and 60. And certainly you could have traded a breakout of 60, but obviously that's not what transpired here with the break of 58.
Well, crude did try to break out Monday morning. It shows for the importance of knowing how carry through on the intraday is. You know, it actually was above 60 on the intraday at the cash open on Monday. Matt just could not carry it, you know, and it started to fade on the intraday, came back, and then today here you're down big and you're down below that candle consolidation, 57.16. I know there's some intraday candles that are trying to hold right here, but I'm watching crude very, very closely. This is a bearish retracement setting up on that intraday chart, Matt. A rally back into 58. I think there's a day trade there.
Rallying to 57.5 by 58, anywhere into this range. I want to touch the retracement off a 2-candle pivot here. That's more of a low base intraday. But if you do see a retracement coming back up into 57.5 or 6 or 58, and you test out that breakout range from an intraday perspective, absolutely, that's a shorting ability, a shortable opportunity. You also have the second shortable opportunity. No day traders looking to buy it here, Tim. Would you agree with that?
No, you're not buying here. You're covering if you're already short as a day.
You're covering.
I don't have any position on crude on this one, but yeah, so you would have shorted it when it broke down below those support levels.
Broke 58, but then you're buying it back down here, and that's what's happening here. There's no trader coming in and being like, oh, let's buy it at 50, let's buy the tick, right? That's not happening. And so basically you have short covering on the intraday perspective, and that's going to create a little bit of a fade action here with the potential breakdown of that 56.5 level, or you see that retracement coming back up into 57.5 by 58. Either one of those are really good shortable opportunities from a technical perspective. It's just a matter of being patient and waiting for the setup.
100%. And, you guys called it. You and Mark were talking about this yesterday back on the daily chart. Quick peek at utilities and XLRE, the real estate. Move back into safety here, Matt. Obviously bond yields moving, interest rates changing, and XLU hit a perfect pivot point, a little bit of a rally.
Yeah, a good pivot on utilities. And this happens when the market's kind of in fade action. But, Mark was really on this in the scouting report meeting on Friday when we were looking at XLRE and myself with XLU. It's just that the deep retracements that we had on real estate and utilities, we saw that as a buying opportunity. And that's what you're seeing on these two sectors here, is they came down into those support levels confirmed. Now you do have that 20-day moving average that is right above it, that if you haven't been into this on that movement, you would probably want it to get back up above that 20-day moving average, maybe even this little consolidation period that you had from a couple weeks ago. That's right where that 20-day moving average is as well. So that's going to play a little bit of a role of resistance as real estate and utilities looking very, very similar to that. Obviously, these two sectors do have correlation behind them. So when you're seeing that 20-day moving average right there, you might want to see it kind of reclaim that. As you can see, that's kind of where it hit its high of today. So, but you are seeing a little bit of a move to safety as the market's kind of taking a stall coming into the holidays this week.
I could see position traders actually taking a stab here at XLU and XLRE, for the summertime, especially theta dividends. There's a theme there that makes a lot of sense as you're heading into holidays and also summertime volatility, waiting for the earnings season to come up. It does make sense to me. Yeah.
Well, and it also makes sense that in a market environment where it's really news driven. It's extremely news driven, and news coming from geopolitical situations overnight, after the market closes, before the market opens. It makes sense to have some safety in your portfolio, Tim.
Yeah, no doubt. Move on to the Dow Jones Industrial. Let's quickly move through the markets and start rocking and rolling through this. One of the news headlines I saw, it's not a lot of, in terms of tariff number, but there was a tariff being proposed on $4 billion worth of EU goods. And one of the cited reasons, Matt, if this makes sense to you, is the Airbus Boeing back and forth, that they've always had for a long time. Apparently, Trump is trying to slap the EU with a couple of things. And here's what really, really pisses me off heading into the July 4th weekend. They're trying to put tariffs on olives, Italian cheese, and Scotch whiskey. What is going on here?
Scotch whiskey, what's going on there? Olives and cheese and Scotch whiskey. Come on, let's get our act together here.
Yeah.
The news coming out, obviously, it's pertaining to Airbus and the incentives that Airbus gets out of the European Union. And yeah, whatever, we give incentives to Boeing.
Yeah.
So it's nothing that we're not doing. We give incentives to, major corporations all the time. So I don't know. It just seems like Trump loves the idea of being the tariff man. And now that the Chinese tariffs are not in the rear view mirror, but we're negotiating again, and apparently we're friends with China again. Oh, well, we got to go create an enemy somewhere.
Cody, defend your boy. Why does he like tariffs so much?
I can't defend him right now. I've had a conversation with Matt about this, but I go back and forth between he's using tariffs as leveraging tactics, try to get a deal done with China, or to try to put pressure on, various countries that he levies tariffs on, like Mexico. But when he just slaps the EU for it, it's like, all right, I can't defend that. That's just dumb.
Yeah, I don't really have a defense of it either, which is,
honestly, and I don't want to get into the political discourse here. Obviously, we're in a investing and trading type show here, but I personally feel like tariffs seem like a win to him, to his base. Mm-hmm. It makes him seem strong to the rest of the world, to his base, and I just think it has more to do with politics in the U.S. than it does good economic policy for me.
Yeah,
I will never see tariffs as good economic.
Well, that's why I don't agree with it, because I'm a hawk when it comes to any type of fiscal, economic, anything. I want people to be responsible and do what needs to be done, not what you want to happen.
Correct. Yeah, no, I'm with you. NASDAQ 100, Matt, quickly move through the indexes. We're going to reserve stock analysis for our Delta analysis, as well as our rapid fire at the end of the show. And by the way, welcome out everybody here in the halftime report. If you're halftime crew, put in hashtag Team Tackle inside the chat. And if you have a question as we go through the show, definitely pop it in there. Let us know how you're doing out there. NQ, Matt, it's a doji. I don't really see much going on here in the market. Heading into the weekend here, and not even the weekend, and heading into the holiday, I should say. Do you expect more of the same? I mean, tomorrow we have some data. We have an ISM number. We have an ADP number.
We also have a trading day that's half the day. And I mean, it just, what are you going to be doing tomorrow?
I'll trade in the morning and I'll check things in the morning, obviously. And then afternoon, I'll probably go golfing. I don't know. Maybe work around the yard, get ready for the 4th.
I'm going to get done with the halftime report. I'm going camping.
Yeah.
And I just don't see there to be a lot of action this week. Mm-hmm. Maybe coming out of the 4th, maybe on Friday, but it just feels like this week is not going to be that aggressive until we see that unemployment report coming out on Friday. I mean, guys, and I think we're bearing the lead here. 121 months ago, we started this expansion. Yeah. That is now the longest expansion in U.S. history, guys.
Correct.
Longest expansion in U.S. history. And that broke the, I believe it's the 91 to 2001 market expansion. Mm-hmm. I mean, let's give a little bit of golf clap for the U.S. economy here. 121 years, not years, 100, that would have been fantastic. 121 months of expansion for the U.S. economy. Unemployment went from 10.5% to 3.6%. Obviously, the GDP is not where we have wanted to be over the last 10 years in this debt-driven cycle. But, I mean, we are talking about a market that's went up 280% in the last 10 years.
Well, Matt, it's interesting you bring this up because I actually posted on Facebook today an article from FactSet, and there were 5 data points, 5 interesting facts on this article that I asked, everybody out there on my Facebook page, hey, which one of these do you think is the most interesting? Number 1 was the current economic expansion is the longest in post-war history, okay? Number 2, the 10-year, 3-year U.S. Treasury yield is currently inverted. The G7 PMI numbers are actually showing contraction around the world right now. And at record low unemployment rates, we actually haven't seen wage growth. And the last one was gold is at a 6-year high. It's a really interesting economy because you have all this strength, you have all this upside, you have 10 years of growth, but you do have some risk factors going on here in terms of other indicators in the market. I don't necessarily see them playing out in the short term, day by day, Matt, but I'm not going to say this market has clear sailing in front of it either.
No, no. If you were to ask me, okay, obviously 10 years ago, I mean, you're looking at the expansion here on the NASDAQ. If you look at it on the S&P 500, you see the expansion here on the S&P 500. I mean, I was wrong. It wasn't 300. We're up like 400% in the S&P. We're up like 700% in the NASDAQ. And although I'm not ready to call for the end of everything, I do believe over the next 2 years, I do believe you have more downside risk than you do upside potential.
Yeah, absolutely could happen. Give me the RTY, if you will, real quick. Let's keep working through the markets. Not much more to update here on the weekly chart. I see a range. On the daily chart, I see a range. Now, the rut is coming back into that range. Still good cash flow candidate. Matt, anything to add to that one?
Nah, same thing.
Same old thing.
Stuck in a range. Keep cash flowing.
U.S. dollar. Now, there's 2 economic reports that can impact the dollar here tomorrow, Matt. ADP non-farm employment and the ISM non-manufacturing PMI, both red impact events. They're in the morning, and you've got a half trading day on the U.S. stock market. Could the currency markets get a little bit more action this week because other markets are going to close down? What?
Oh, absolutely.
Yeah.
Absolutely. I mean, you do have 2 economic reports coming out. You also had the Australian central bank announced monetary policy last night. And like I said on the dollar yesterday, I still had a slightly bearish call. And that's not an easy call to have, T. When you have this type of movement coming out here, for me, I just felt like it was an overreaction to a very, very weak economic report, in my opinion, right? Mm-hmm. And so you're coming back up into that 20-day moving average, and now you're starting to slow down. I don't see any trigger here on the dollar until it comes back under 96.5. So that's kind of where I'm looking at the trigger. But I still have this as a bearish downtrend, very similar to what you saw in this type of movement here. You started seeing it slow down, and then you saw that confirmation on the downside. And like I said yesterday, I still believe we have at least one more leg down in the dollar going down before we see some type of slowing momentum, bullish reversals. So I still have that slightly bearish call on the dollar.
Well, and I got to tell you, the two biggest currency pairs in the world, the euro dollar is setting up on a bullish retracement, and so is the dollar yen. If you've ever been looking for a reason to trade Forex, and maybe you've been waiting for something, well, tomorrow the stock market's going to close early, and you've got Forex pairs setting up here, Matt. I like this retracement. I think it still needs more, and you've got that economic data tomorrow, but
that's true. But also, just to make sure everybody understands, is you do have ETFs that track these currency pairs as well. And so even if you don't trade currency in terms of the Forex market with, trading the pairs, you do have ETFs that you could trade here that kind of track the exact same thing. So when you're looking at the euro dollar cross pair here, and you see that nice little W formation breaking out of resistance right there, see the confirmation here. I mean, that's a really good reversal type formation, Tim. I mean, if you look at this on anything else, you'd say that's textbook.
Yeah, it's a perfect reversal, higher pivot high, higher pivot low.
And now look at the relationships on the pips. I mean, look at this price movement. Look at this price movement. From the pip price movement of 111.20 to 113.30, you're talking about 220 pips. And then you go from 111.90 up until about 114, you're talking about 210 pips. The retracements are similar. The upward movements are similar. That's algorithms right there. People don't make it that consistent. That's algorithms. And that's why you see the consistency there. You also have a couple other pairs. You said, in terms of the US dollar yen. Let me look at the Swiss franc pair here first. When you're looking at this one might be one of my favorite one in terms of of a bearish dollar type bullish Swiss franc pair. You have the dollar depressing against the Swiss franc. You have that retracement coming into the breakout channel. You have that slowing momentum candle with the potential confirmation. Again, that's textbook bearish retracement type situations. Then you have the dollar yen pair, Japanese yen, JPY. You have a similar type situation here, but I like the Swiss franc a little bit more than the yen. I like the Swiss franc a little bit more than euro trade too.
There's quite a few cross trades in the Forex market that are setting up, looking for directional moves in the dollar. And, Forex, there's so many ways to trade the Forex futures, Forex cross pairs, Forex ETFs. If you've never traded currency, dig into it.
Literally, you have every type of instrument to trade currency. Here you're looking at the Euro futures trade, same type thing. Here you're looking at the ETF version of it, same thing. And here you're looking at the actual cross pair, same thing. There's many ways to trade currency, and we see it in our data all the time, Tim, that our options report is by far the most widely followed report we do. By far the most followed report, probably 30% more than the stock report, and then the commodity and the Forex report are lag tremendously over that. And I think that's a mistake because there's so much that the dollar impacts so many other instruments. You need to understand where the dollar's going because it impacts bonds, it impacts currency, it impacts commodity, and it certainly impacts stock too.
Oil next. We talked about it very briefly, Matt. Obviously, you still got supply numbers coming out throughout the week, and you've got other volatility. But from a pattern alone perspective, is this a bear retracement confirmation, or do we need?
I don't think it's I wouldn't categorize it a bear retracement. And the reason I wouldn't categorize it a bear retracement is because of this reversal pattern here. You didn't have a standard retracement coming back up. I mean, when you're looking at a bearish retracement, Tim, and coming back down to the US dollars / Swiss franc pair, that's a retracement right there. That's a retracement. You see these, excuse me, see these retracements that come back, a standard retracement, 3, 4, 5, 6 days coming back up into resistance with the downward movement in price. That's a retracement. When you're looking at AMTD here, and you see this retracement, 3, 4, 5 days coming back up into resistance, downward movement in price, that's a retracement. When you look at crude oil here, crude oil didn't have that. Crude oil came up, set a pivot, came down, set a pivot, and then drove back up. That's more of a short-term W formation, which is a reversal, which means this drive back down in price, which would be actually technically a bullish retracement, Tim. And so you got mixed. The whole point is you got mixed signals here. You don't have a standard trend in crude oil going on any longer. It doesn't mean you can't take a quick trade under 58 with a potential target in the 55, 56, 54 range. That's not what it means. But it does mean that you don't have the same degree of probability that you do on, say, a standard retracement that you have on TD Ameritrade or, the US dollar Swiss franc pair. So to me, it's still tradable under 58 because you have that K trade type scenario, but you have mixed signals here from a trend perspective.
We had to move back into gold here today as well. And, it's interesting. This is a huge candle on gold. It actually engulfs the previous candle. So crude oil volatility, gold volatility, same thing day by day by day. These storylines continue to evolve, and they're about the same thing we've seen for a while. But I like this gold setup, Matt. I know it might feel early for investors, but for a trader like me who's just looking at candle price action, I have not pulled the trigger on it just because we're heading into a holiday week. And that's going to make me hesitate on a directional swing trade or position trade on gold. But man, the green candle has completely engulfed the previous red candle. You've got to like that candle setup.
Oh yeah, I mean, especially if you think the dollar is going to continue to come back down.
Mm-hmm.
I talked about this yesterday, and I talked about it on the pod yesterday. And by the way, make sure everybody's downloading the podcast today. We released it yesterday. Real fun, real good quality podcast. Had Pete Thomas on there, and I just love listening to Pete. But we also talked a lot about what was happening with gold and the dollar. And the gold came down not based on the dollar, in my opinion. It came down based on those geopolitical concerns. Mm-hmm. And you're seeing the same movement in gold that you saw in utilities today. You're seeing the same movement in gold that you saw in real estate today. You see that flight to safety a little bit. And coming into the weekend, maybe you don't take the position, but like I said yesterday, you could certainly trade that above 1400. You could certainly trade that above 1400, and that's what we broke up back up above that 1400 level, and we got some real good volume starting to come into the market so far early in the trading day. So to me, yeah, that's tradable for me. Absolutely, 100%.
And my mind instantly goes to places like, how can I play this if I'm feeling like it's an aggressive entry point? Well, I can obviously trade the futures contract. I can trade the ETF. I can trade the miners. Well, I got to tell you, real quick, I see cheap options, Matt, in the leap options all the way out in like January. If I'm buying it for different reasons, a trader might just take a directional quick trade in the actual equity or the futures market. But I'm looking at 14% volatilities in the January 2020 options. That would give me 200 days of time.
I'm going out 353 days. 14% volatility. I mean, you're only paying 5% premium to get into a 60 delta contract.
Well, look at that 133 strike. It's got 2,600 open interest.
Just real quick, Tim, just to compare that, take AMD in the exact same scenario, right? Same type 60 delta contract. You're paying $6.10 to get into the contract. That's about a 20% premium. Okay. 20% premium just to get into that contract. You come back to GLD here, same contract, same delta, 59 delta, you're paying $7.50 against $132. You're paying literally about 5%. So, it's just, premiums are going to be cheap. And that's a little surprising given the fact that we've had a lot of price movement on gold. So there's a lot of ways to play this. For me, above 1400 on gold, I'm bullish there. You certainly can play the GLD. Obviously, GDX, which is the gold miners, is going to kind of track what happens with gold, and you have a confirmation here as well. And like what Mark would say is, well, when in doubt, just sell a $23 put option and collect some premium.
Yeah, I get that as well, but I do like the cheap nature of the leap option. And when you buy the leap option directly, you've got more upside if gold does catch a trend.
If you're position trading this for the next 3-6 months, right? And you want to take a position, leap options on GLD, absolutely 100%.
Makes sense to me. I do like it. I'm looking at the other metals markets. I do like the candle on silver, but I've not pulled the trigger on silver yet, Matt. I keep watching this thing. It's got a higher pivot high, higher pivot low. No confirmation on this one quite yet. I'd be waiting a little bit more.
I'll tell you what Pete said, and I'm not. And guys, again, listen to the podcast because a lot of gems come. Guys, every time I've had Pete on the podcast, we've made calls. Okay, we've made calls. We made a call on buying gold last October. What's happened? I remember Pete made a call on buying palladium when it was at 800 and it went to 1500. 1400. I remember me and Pete made a call on shorting Bitcoin at 19,000 back in like November of 17. Whenever Pete's on the things have a tendency to move, and it's because Pete knows what he's doing. Pete's been doing this for 40 years. And I asked him a question on silver. I said, Pete, why is silver so far underperforming gold in this movement over the course of not the last month and a half, but I'm talking about the last year or something, from last October on? He said, Matt, it's going to have its day, and that day is when infrastructure comes. When we make an announcement on infrastructure, that's when silver, platinum, and palladium are really going to start to move. And Pete's price target was in that $20 to $22 range. So it's certainly underperforming. But my perspective is, from the technical perspective, I love what I'm seeing in silver here. I love the reversal that we're seeing, the left shoulder, the head, the right shoulder, the breaking of resistance here, the higher high, the retracement coming back down into the breakout channel. I mean, from just a pure technical perspective, how do you not love silver here?
You got to like it. I mean, obviously the longer term charts are not as strong. You've got, and then you've got all the strength in gold and palladium. So I guess the debate would come back to, well, which of the metals are you going to play? You're going to buy silver, gold, have a mix of it, kind of get a balance of different metals, or would you
let's rank them? Let's rank them. Obviously, for me, gold's one.
I don't know, man. Palladium. Look at palladium.
I get it. I get it. I get it. But you're buying an overstretch coming into an all-time high.
Yeah. I would put gold one too.
And you're slowing down here.
Sure.
Okay. So I get it. Over the course of the last year and a half, look at what palladium. Look what palladium's done. And by the way, this is where right here is where Pete made his call on palladium. And boom, 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 boom. And so, I'll come back to what Pete said. I asked him the same question on palladium, Tim, and he said the most likely scenario is palladium comes back down to test that 1400 level. Okay, and I agree with that. I mean, you are seeing an overstretched short-term range coming into resistance. More than likely, if we kind of zoom in here, you're starting to fade here, creating a high base, and so certainly wait for that high base to kind of play itself out. A breakout could run. You could trade a breakout here, no doubt. It can run. But for me, looking at gold, that shiny metal that really kind of, is the safety type play. So I'd have gold one. And based on the technical setup, Tim, and this is a little surprising given what silver has done, but I really like the technical setup. I don't like the fundamentals of silver right now. I agree with Pete that the fundamentals come in line with silver when you get an infrastructure play. Because, guys, infrastructure, when you're talking about physical infrastructure, you need commodities, right? You need steel, you need iron, you need ore, you need silver, you need platinum, you need palladium, but you also need that from a digital infrastructure perspective. And so when we talk infrastructure, ladies and gentlemen, it's not just roads and bridges and dams any longer in airports. You're also talking about your digital infrastructure, and that takes silver and platinum and palladium as well. What none of that takes is gold. Gold is just that shiny, precious metal that drives people crazy, that has been the safety play against currency, against market volatility for thousands of years now, and that's not going to stop overnight. But when I'm looking at this purely, if I remove the fundamentals from the equation, because I don't think we can bet on infrastructure, Tim. I just don't. And I said this in the podcast. I wish our politicians would actually do something for the people instead of just sitting there and talk. But I just don't think they're going to get along in the 2020 election cycle enough to get a massive infrastructure bill, even though it would be beneficial for society as a whole, for companies, for people, for absolutely everybody in America. I don't think you're going to get it. So you can't bet on the fundamental argument of infrastructure until we actually see it. But from a technical perspective, I love what I'm seeing in silver. That is a strong reversal with a textbook retracement, testing that breakout channel, and it hasn't confirmed yet, right? It has not confirmed yet. But if you drop this down into a 30-minute chart and you look at this retracement, what you're going to see here is you're going to see a nice little trend line coming down, and that's exactly where it hit its head on today. So even though you are breaking out of this intraday support, which also coincides with the intraday support over here, that's a nice little day trader signal. But outside of the day trader signal breaking out of the high of yesterday, that's not important. For a swing trader, you have to break this intraday resistance line that is very, very strong on silver. So it hasn't confirmed yet. I haven't pulled the trigger until we get back above that 30-minute resistance level, but that could come into tomorrow, could come into on Friday as well.
Yeah, I like the action. Obviously, there is always interesting action. Think about the markets, Matt. We came in today, it's like the S&P and the Dow and the NASDAQ, they're all kind of flat and boring. But crude oil pivoting, metals pivoting, there's all kinds of action. I'll tell you where there's a lot of action, as well as cryptocurrency and Bitcoin. Bitcoin finally trying to hold here. Now, I know you're not trading it. You don't play the volatility here.
No.
And I don't even have a trade on it right now, by the way. I'm still waiting.
You're thinking, though.
No, not necessarily in the short term. If it came back and stabilized around 10K and gave me a good pivot, I would play it. Yeah.
Well, I mean, remove the volatility from the equation. You tested 10,000 here and you have a hammer candle.
Yep.
I mean, like literally, I woke up and the first thing I see on Twitter and the first thing I see on everything is Bitcoin under 10, Bitcoin under 10. And by the time I looked at it 5 minutes later, it's at 10,700.
Mm-hmm.
I mean, that's what Bitcoin can do. It can absolutely fly. So even though, I don't trade Bitcoin, and I'm not going to trade Bitcoin until the craziness subdues, but you love this 10,000 level. Obviously, you're not going to take a stab at it with here, but if it does slow down, say then 2-3 days, give you a little bit of slowing momentum, give you some intraday trigger that you can trigger, you're going to trade that.
Yeah. Yeah, I will at some point if it does give me those signals. The hammer candle alone, it kind of goes back to the bullish retracement module that we released a week ago and we talked about in the coaches show. And we're going to be talking about the step system here in just a minute. But getting a candle coming back into a pullback is not enough to take a trade, Matt. You need a confirmation candle. You need price action from there. So that's kind of where I am on Bitcoin. I need to get that confirmation based on my system.
If for those of you who have reviewed modules 3, and if you reviewed module 3 on the bullish retracement, let me know there in chat. If you remember, how to score the pattern, you have a bullish uptrend. We have that on Bitcoin. Do we have liquidity? Yes, Bitcoin is liquid. Do we have a corrective retracement? A corrective retracement is defined by a standardized movement back down into support with a minimum of 3 days, 5 days to create a pivot. I don't know if that's a pivot yet. I just don't know. It's up, it's down, it's up, it's down. And so maybe it doesn't have pivot, but does it come down into a technical catalyst of support? Obviously, $10,000 is going to be a significant whole number. You also have a rising moving average into that range as well. So I wouldn't say 10,000 is a major support level. I'd actually say, 9,000 would be a more important technical support level, to be perfectly honest with you. But you are coming into a level of support. Do you have a signal candle? That is a hammer candle. And do you have a confirmation candle? No, you haven't closed above the signal candle yet. So you're early based on if you understand module 3, the bullish retracement, and you understand how to score patterns, you would say it's too early.
Can't go off on this too long, Matt, but because I know you and we could talk about it for an hour, and I love this. I find it fascinating. Christine Lagarde just got nominated by the European Central Bank governors to become their president. The EU is nominating her to replace Draghi. Draghi was one of the most influential bankers in the world, but those of you who don't know, so was Christine Lagarde, heading up the IMF there for a long time, Matt. Any reaction to that?
Yeah, I haven't read that. What?
Hold
on. Say that again.
EU leaders nominate Christine Lagarde for the ECB president.
That's interesting.
It is interesting to me. Now, does that mean?
Let me speak out loud on my internal thoughts here. Christine Lagarde in 2009 and 2010 at the bottom of the subprime market was pushing the IMF SDR, which is a basket of currencies that acts more as a bond. And currently it has the dollar, the yen, the pound, so you have dollars, euros, pounds, yens, and now the Chinese yuan within that basket. But back then it was only dollars, euros, pounds, and yens.
Mm-hmm.
And she was pushing the SDR to be that next reserve currency of the world. And she made a statement back 10 years ago that even though the IMF SDR is not a currency, it can be converted to a currency. And they started minting a coin out of Brussels that had on the coin, it basically, I can't remember what the coin said, but it was something around united. Like it wasn't in God we trust that's on our coins. It was something united in something. I can't remember exactly what was on the coin. There was a lot of speculation back then that the IMF was going to start minting the coin to back the SDR to be that next reserve currency of the world, as most of the world wanted to move to a diverse currency system instead of the dollar being the reserve and the dollar is not a singular reserve, but at the time it was about 70 to 75% of the reserve. Mm-hmm. Christine Lagarde is a global type thinker. Obviously, the individual who ran the IMF. Christine Lagarde is a cutthroat banker, And although I think a donkey could do a better job of running the ECB than Mario Draghi, it's going to be interesting to see what Lagarde does from a global perspective with the euro.
I find it interesting, just the names alone. Yeah, I mean, bringing in Christine Lagarde, if she does take that helm, and I don't know what Draghi's role will be. I've got to dig into it a little bit more. That just hit the
Hopefully his role is retirement.
Oh, he's been the asset protection program, guy for about 10 years now, Matt. I remember when they launched that it's not even been 10 years, it's been 7. I remember when they launched that program, they said it was going to be like 1 year, short term.
They literally said it was going to be 1.1 trillion euros. And like 5 minutes later, it's like, no, I lied. It's 1.7. And from that 5 minutes on, he's never met a rate hike, and he's never seen a quantitative easing program that he didn't fall in love with. He is chiefly responsible for everything that is wrong with the euro.
Yeah. If you're ever looking for a good currency book to read, by the way, I love Rickard's books. Currency Wars and The Death of Money are 2 that Matt and I have read. We actually had a podcast on the death of money at one point, Matt. So if you want to go check the archives out.
Contact Jim on Jim Rickards. Great author, by the way.
Mm-hmm. Oh, yeah.
I'm going to see if we can get him on the pod.
That'd be awesome. I would love
Jim Rickards on the pod.
Dude, I would love to talk to him for sure. I mean, even just his role and his work with the CIA back after 9/11, when he went in and he studied like the options activity and unusual activity in the markets and how they were tracking terrorist stuff. And then his thinking in 2019 is so transcendent. It's beyond what's going on in the currency systems. I think is really, really smart, really wise. And I definitely recommend any of his books. You send him a tweet. I would love to have him on the podcast.
Yeah, I'm gonna DM him. See if I can get some action there.
I like it.
The only thing people can say is what?
No.
They go say no.
Or they could ghost you. They could ignore you.
They can ghost you.
Yep, that's right.
I mean, that certainly happens on social media all the time. But again, you get ghosted, you get told no, who cares? It'd be a wonderful interview.
I sent Denzel Washington a DM the other day.
Did you? I doubt he responded. I will tell you, though, in the next couple of weeks, we have a guest coming onto the pod, guys, that you're going to love. You're going to absolutely love. And I'm not going to reveal it until we actually record it, but you're going to love it.
Mm-hmm. Yeah, 100%. I'm excited about it. We're going to be making that announcement here in a couple of days, Matt, and getting ready for that next podcast when it does come out. I think it's going to be a fascinating interview, and we got to be ready for that one, no doubt about it. Matt, 15 minutes to go here in the show. I do want to talk Delta. Either one or both of the symbols that we were discussing, and then do a quick rapid fire right at the end.
We're going to be. So we released Module 4 last week. Module 4 is on the bullish breakout. We are releasing Module 5 today, and I got to tell a quick story, Tim. Just real quick, okay? Halftime crew, you'll probably like this. So I got done recording Module 5 a few weeks ago. And I was doing the editing for Module 5, and it was after a very, very long day of recording Module 5. And, when you're recording a 2-hour type modules, 5-1, 5-2, 5-3, by the end of the 2-hour record, Tim, how long does it take to really kind of record a 2-hour system?
Oh, God. I mean, days, yeah.
Days,
prep and design, and then
prep and design takes months and months, right?
Yeah.
But I'm just talking about the actual recording. By the time
days.
You're talking a couple days, right? With recording, edits, recording edits, stuff like that. So after a couple of days, I'm just done. I'm exhausted. I'm dead to the world. I've recorded too much and I've edited too much. And so I still remember editing modules 5-3, and I'm like, oh, okay, I had a clean cut. All right, just quickly edit, right? Just quickly edit. So I'm going through the edits and I get done and I post it to Christian, and Christian gets it ready to post to the website. Well, one of our students got hold of module 5 before we released it. And I'm not going to say who it is, okay? I think he might be here actually, but he sends me a DM on Twitter. He says, Matt, so I just watched modules 5-3 and, awesome content. And, you might want to check the 6-12 second mark in module 3. And guys, you won't see it because I recut it on the edit, but so I'm watching, I'm watching like the first minute, the second minute, the third minute, the fourth minute, the fifth minute, and I'm getting into the 6th minute. I'm like, yeah, this is good stuff. Clean cut, clean everything. And so I get to the slide, and the slide is inverted on the rules. And so it was the bearish retracement, which means we're the entries to the downside and stop losses to the top side. But Christian had put the entry to the top side and the stop loss to the bottom side. And so I'm watching this recording, and I stop in the recording for like 5 seconds, just staring at the chart, right? Staring at the slide. And all of a sudden what the F? I had that in the recording and I forgot to edit it. And so I was dying laughing last night as I was re-editing that. But I'll just tell you guys, after 2 days of recording, 2 days of editing, I had a WTF moment and I'm glad one of our students caught it, because that would have been bad.
What's funny about this, Matt? You and I, we've been in business together. We're brothers. We're best friends. But one of the most intimate things that we do probably is edit each other's video work.
We do.
Because I get to listen and think and actually hear what you're saying. And when I was listening to that last night, the fun part of it for me was when you paused, looked at it, knew what something was wrong, and then what the
hell? Well, it wasn't like a fit. It was just like a what the.
Yeah.
It's just like, what is going on here? But no, so you guys won't see that. But we are releasing that one coming up this week in terms of the bearish retracement. So get excited for the bearish retracement, Tim. And we're going to be talking about the bullish breakout on the Coaches Show tonight. So for the pro members of Tackle Trading, ladies and gentlemen, make sure you're in the Coaches Show tonight, because we're going to be going through the rules, the adjustments, stop losses, targeting, entry rules for bullish breakouts, using it for the scouting reports. So make sure you're in that tonight. But what I want to talk about very quickly is just kind of what we're going to be releasing here today to the pro community over there at Tackle Trading, and that is module 5. And what module 5 is, Tim, and I'll kind of just show you all the content you're going to be seeing here. But what module 5 is, guys, and let me get down to it, is basically in modules 5-1, you're going to be going through what the core pattern is. You're going to be going through, the different types, not only the core pattern, but how to trade the core pattern. What are your entry rules? And so here's where we kind of get started in it. So you're going to go through your entry rules on everything. You're going to go through your stop loss rules, your targeting rules. But the one thing I wanted just to kind of quickly talk about here in modules for the bearish retracement, Tim, is just learning how to score a pattern. Okay, learning how to score a pattern is very important. And so when you're looking at kind of understanding how to score patterns, you're talking about primary qualifications versus your secondary qualifications. And when you look at your primary qualifications, if I swap presenter view here, when you look at your primary qualifications, you're talking about, number one, you got to have a bearish downtrend as defined by lower pivot lows, lower pivot highs. That is support decreasing, resistance decreasing. Number two, you got to have a liquid stock so that you can trade on it, so that you can get in and out of the position in a very quick time frame. And liquidity doesn't just go to the stock. a lot of us who trade in the short term, we trade options. So liquidity also goes to the option contract. And in modules 5, I talk about the differences between open interest versus volume, not only on the stock, but also in terms of the option. We got to have a corrective retracement. In module 5, I talk about exactly what goes into what is a corrective retracement. It's not just a pivot coming back up into resistance. So I walk through the techniques of how to identify what a corrective retracement is. I talk about how it has to come into a technical catalyst of resistance, and I walk through the different techniques for the for resistance levels, such as Fibonacci extensions, or significant whole numbers, previous areas of resistance, support that now act as resistance, trend lines coming down, moving averages, and I talk about that regarding the bearish retracement. I talk about what a signal candle is, and then obviously with your confirmation candle, and then when you come into your secondary qualifications, and this just kind of walks through all the different bullish liquidity, going through all the detail. But when you're talking about your secondary qualifications for that bullish retracement, I talk, and I'll just kind of pull it up here again, just kind of walk you through the rules very quickly so you guys get excited for this module being released. Secondary qualification, I talk about how volume plays a role in participation in the bearish retracement. We talk about how we can identify secondary confirmation by using the MACD 1 hour chart. And I talk about the difference, not only confirmation here, Tim, I also talk about how MACD can help with what's called bearish divergence as well. When you have a stock coming up, but then you have a MACD that is showing bearish divergence from an intraday perspective, confirming the slowing momentum in the chart, which leads you into market and sector correlations, implied volatility, earnings, fundamentals, all of these secondary qualifications as well. So that is being released to the pro members here today. So what we wanted to do, Tim, is we wanted just to pull up a stock on one of the scanner reports from this week, and that is AMTD, which is TD Ameritrade, which is just so happens to be the owner of Thinkorswim, and they kind of drive me nuts sometimes. So let's go ahead and make some money on the commissions. So in terms of this, we have a pivot low, you have a pivot, you have a lower low, lower high. So you have your support levels decreasing, you have your resistance levels decreasing. So when you're looking at your primary qualifications, and when you're looking at your primary qualifications, there are 6 primary qualifications. Number 1, do we have a bearish downtrend? Absolutely. Number 2, is it liquid? Well, yes, it's liquid. On average, you see my little average volume here. On average, you get about 2.5 million shares traded daily on TD Ameritrade. And what we consider liquid is something above 500,000 shares traded daily. A lot of us traders like 1 million shares traded daily at a minimum. When I'm scanning for the scanner reports, Tim, I scan on 1 million shares traded, not on 500,000 shares. But at a minimum, you want about 500,000 shares, mostly about 1 million shares. Obviously, with TD Ameritrade trading at 2.5 million shares on average, that certainly is liquid. When you're looking at the options here, and we drop that down into open interest and volume, if I'm looking at trading these options here, whether that's the $50 call option or the $45 call option, you see your volume here and open interest. The most important part of this is open interest. And on the strike prices that we buy in the system, we're typically working within a 0.50 delta to a 0.60 delta. You have 518 contracts that are open on that 136-day contract, 198 on the 50-day contract. Not a lot of activity on the volume, with only 15 here on the $50 contract, but that open interest is certainly liquid enough, and the bid-ask spread is certainly tight enough to get in and out of TD Ameritrade in a short time frame, which means we are liquid. Do we have the corrective retracement? 1, 2, 3, 4 days into the pivot? Yes, you have that 3 to 5, 6 day retracement coming back up into resistance. So yes, we do have a corrective retracement. Are you at a technical catalyst? Well, number 1, that 20-day moving average is certainly going to act as a resistance level. You're also right into that $50 range. You're not really into a trend line unless you kind of connect the dots right here, coming down into that resistance level. So you certainly have a trend line here, And I know you don't like it, Tim, but I'm going to draw the Fibonacci just because
That's okay.
Just because it's part of a catalyst, and you're right smack dab in a 50% retracement, which is Goldilocks level of retracement here, Tim. So coming into the technical catalyst, I would have loved it if it would have got into this pivot here. So you're at a moving average, you're at a Fibonacci level, you're in that zone of a significant whole number. You're also right here on a decreasing trend line that kissed off yesterday. So yes, you're coming into multiple levels of resistance level. Number 5, do you have a signal candle? The signal candle, let me kind of erase my drawing set so we can look at this. The signal candle is right here. You have the bounce, the signal, the confirmation. This is textbook here. It doesn't mean it's going to work. That's not what trading is. Probabilities, right? But you have a bounce, signal, confirmation. So you have your signal candle with the inverted hammer candlestick here, Tim. An inverted hammer tests up, gets smacked back down, and that gives you great confidence on it trading even lower. And then number 6, you have your confirmation candle, and that is right there. So you have your signal and your confirmation candle score 6 out of a 6. That is how you score a technical pattern, T.
First of all, amazing job. One note I want to make on the November options you were bringing up. I actually brought up that option as a chart. And just a quick note, this is probably one of the most simple things that traders get confused about with their rules is that idea of volume. Matt, that option has only existed for 3 days.
Yeah, it's not been out there long.
I mean, so it's not like it's been traded for months and months and months. So the volume, of course, is going to be a little bit lighter when you're looking at the November contracts. But the open interests are already at 500. And if the bid-ask spread is liquid, the open interest is liquid, and the volume on the stock is liquid, you can trade that option. Just be aware of that. I understand, you got to have rules, you got to have liquidity rules, but understanding liquidity adds a little bit more complexity than just looking at the volume number.
No, I agree with that, but you could be the first on volume, D.
Of course, yeah.
I mean,
especially in the morning,
Yeah,
I mean,
you could be the first on volume. I mean, 0 on volume is not going to stop me from making a trade. Right, there's 15 contracts traded on the 50 strike price today, so on the call side, obviously. But the more important one is, for me, anyways, is when I'm looking at liquidity, I'm looking at tight bid-ask spreads. I'm looking at open interest. I'm looking at delta and having deltas not go from 50 to 11 in the next strike price, right? Mm-hmm. So volume to me is secondary. It's not a primary qualification because you can be the first. You got to have open interest, though. You have to have open interest. And with 200 contracts traded, 500 contracts traded, that certainly is liquid.
I'm looking at a potential little intraday breakout on one of my favorite companies right now, Matt, AMD. I got to tell you, I like this one setting up. And as it's moving here, we had a deeper pullback retracement. We have a pivot candle. Interesting. Just keep that on your watch list as we're heading into a holiday week, guys. Quick rapid fire, 5 minutes. Any stocks that come in. If you're still here watching this live on a day where the market is dojing, we appreciate your time, your attention, and it's always good to do rapid fire, Matt. It's one of my favorite things, just looking at stocks, looking at charts, and great analysis on AMTD here. When stocks come through here, I will punch them in for you.
I like that breakout on Disney, though.
I know we were going to analyze Disney, but I think
fine. We
can look at it tomorrow as well. I do like it. I love the bullish breakout potential on Disney. And look at that depth. I did not look at Roku. Ding, 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 ding. That's going to go on my watch list. You're in a bull zone down here.
I'll tell you what, on Roku, what really kind of stands out to me on Roku is a straddle. I like a straddle here. Number one, you are sitting at a support level. There's no doubt about that. If I was trading directionally here, Tim, that to me is not confirmation. That to me is just kind of a fade action. Confirmation for me on Roku would have to start with getting above this level right here. Mm-hmm. That's where it'd have to start. You got to get back up above 95, breaking out of this intraday resistance level here at 95. That to me starts with confirmation. But then you have a problem with your smack dab right underneath that 20-day moving average. And Mark did some back testing just recently on bullish retracements, and what his evidence led into was that yes, in the bull zone you have a slight edge. But when stocks retrace deeper in this market right now, not all the time, but in this market right now, when stocks retrace underneath the 20-day moving average, the probability goes down quite a bit. because you're just finding so much resistance to get back up above. So for me on Roku, it's kind of a stay away even above 95, just given the fact that you're right underneath that 20-day moving average. But wake me up if it gets up above 100.
Wake me up if it goes. And that's Majin's first one here in our rapid fire. Bring up Lyft, if you will, from Ime. And my man Ime. Do we want Cody in on this one? Does he get a right to speak?
Does he get a right to speak?
Yeah, let's bring Cody in. We'll rotate him in.
Okay.
Cody, what do you think of Lyft? Down 2 candles, big red candles, bringing it back here. Failed breakout.
It's definitely a failed breakout. You should be out of this trade already, and then don't touch it until the next setup happens.
Yeah, I agree. Matt, you took your trade off on Lyft last week, I believe. Heading into the G20.
And if you're still in it because you're holding, and I know the pain, guys.
Oh, you're not recovering that option.
No, yeah, exactly. If you're still in it, and I know the pain of losing money is there, exit the trade, be done, put your money to work somewhere else where it's going to make money.
Well, okay, and to understand what Cody's talking about, if you're making that trade on this breakout and you're trading, this 80-day contract here, that breakout would have been at 65. Okay,
Mm-hmm.
That's where that breakout was. And so if you're looking at trading that breakout above 65, you're probably trading the $65 contract. Well, now that delta is 41. If you're trading the $65 contract, that delta would have been 65. That delta would have been 35 now. It just means that you have to see tremendous price appreciation just to make back your delta difference, and that's just not going to happen.
And as data fades and destroys,
it's just not going to happen. So for me, coming into Lyft, I just didn't want to carry through the G20. I was going to open the position back on Monday if it got above confirmation above the high of Friday, but it just didn't do it.
Mm-hmm. Next one is
Lyft driver crash.
Yeah. Was there a Lyft driver joke there that I'm going to skip right over? Yeah,
yep,
I think
skip right over it. Go for it.
Yeah, there is PayPal, high base up here, Matt, on the top side. Obviously, just a beautiful long-term trend, been one of the stronger companies in the marketplace. Little complexity in the candlesticks up here, which would lead to probably a tougher swing trade if that's what you're looking for. Obviously, kind of a position trade. Canada earnings coming up mid-July. Be aware of anything that you're doing heading into that.
I will say PayPal was on the scouting report list.
Mm-hmm.
It got vetoed by multiple different coaches.
Just kind of some tough triggers, isn't there?
That's exactly what we were talking about, Tim. It was just tough on the trigger. We love this stock. We love this stock. We love the fact that it was coming back down into the breakout channel. But you just had so many tough triggers that, you trigger above the intraday at 117. You're staring right at 120. I think you got to wait till it goes above 120.
4 quick ones, then we'll be done with rapid fire. URI from Jonathan. Jonathan, always great to see your name in there. I'll take this one. Neutral earnings coming up. It's got to be a Vega trade or nothing. PayPal, we already looked at. Give me Beyond Meat, Matt, and I'm gonna let the young man, the chemist who would understand all of the things that go into the Beyond Meat patties.
How they're making a random.
Who's going to make a good old brisket coming in for the 4th?
That's right.
Analyze Beyond Meat, buddy.
I almost bought some frozen Beyond Meat hamburgers in the grocery store yesterday just to try them. And by the way,
I had a vegetarian taco last night for dinner from Beyond Meat.
Yeah.
Half my family's vegetarian.
The cost was not unreasonable. I got to tell you, I thought the price tag would be much higher on some of their items in the grocery store. It's not.
It's only higher at the restaurants.
Yeah. Yeah.
They are charging massive markups on, like, a Del Taco is like $3 for $1. A Beyond Meat taco's like $4. Like,
sure.
Literally, it's ridiculous. It's just they're trying to drum up revenues through marketing and utilizing this movement. But the actual cost at the grocery store is not that different from regular meat. It's not.
Correct. Yeah, Cody, what are you seeing in the chart here, bud?
I'm seeing a neutral wedge type pattern start forming, or an ascending wedge if you would, and I want to see it break above that before I could trade it to the bullish side. But it is fading up. It is a popular stock.
I'm sorry, that's the wrong answer. The answer was head and shoulders pattern in an overvalued PE ratio.
I'm not seeing that
the downside.
I'm seeing that rising 20. If it does break below the neckline, then absolutely.
Hold on. But if you're reading that tick at 201 as a head, then maybe. You're being extremely liberal with that reversal argument, though.
No, I don't see that yet either.
But
there's some
I
complexity in that chart. Yeah,
as a neutral wedge, it could break either way.
You are post earnings.
I would have that more as an ascending triangle than a head and shoulders formation.
By the way, based on my rules, I would be willing to take trades in a company that's post earnings at this point in their IPO cycle, Matt. I know we're only end of June, but you've got 2 or 3 months of data. You've got an earnings report. You've got the options market, which is liquid. Wherever those signals come in, you're going to get volatility in Beyond Meat. There's no question about that. And then last one here is Apple Computer. And Matt, we'll let you close out the show. Take the last one here, then we'll have some announcements.
All right, Linda. Apple breakout at 200, playing defense above 200. Anything, if it holds above 200, I could definitely see some trading coming here. But I just have a sneaky feeling that 20-day moving average is going to catch up to it before it actually makes its run.
Yeah, and you got a holiday here. It would not surprise me at all to see Apple and a lot of these big name companies just kind of fade into the holiday. Everybody goes camping and golfing and whatnot, and then they come back next week and we'll get some volatility in the market. The next big storylines are going to be the same as the old big storylines: more trade war, more discussion about Europe and global economic slowdowns. But Matt, the reality is earnings season is coming up upon us, and I do think that's going to be the huge thing as we go. Guys, if you are watching our halftime report on replay, great to have you. Give us a like, put a comment down below. If you're watching our show here live, always great to have you. And we do these rapid fire segments at the end, Matt. I know we end up running a little bit long, but I love looking at companies. I mean, it's pretty simple. I can trade every day forever because the market always brings up something, even when it's boring. Now, that being said,
from now on, everybody lock in, though. 15 minutes after the hours is when we're starting rapid fire.
That's right. I do like that. And then just punch in your symbol and then we rock and roll through it.
15 minutes after the hour, every time, 15 minutes after the hour, punch in your symbol. We'll start rapid fire. But you're definitely going to want to be here every day for earnings season as we go through and making sure everybody's up to speed on what's happening with earnings.
Hey, Matt, I got a question for you. I got 3 books that I might start over this holiday week, and I've got time to do some reading. One of them, one of my students recommended a history book by this guy, and I already have it up on my shelf. It's called Sapiens. It's the history of the world. And it's a New York Times bestseller. It's about 300 pages. I also have a book that one of my students gave me over the weekend, and it's called Own the Day, Own Your Life by this guy, Aubrey Marcus, which is usually on the Joe Rogan podcast. He's like a fitness guy.
Book. I've read that book.
One of those two, history or productivity. Matt, what do you think?
I kind of want to do the I typically will lean to history, but I kind of like that productivity one.
Yeah.
Hopefully, I'll tell you what I'm reading.
Yeah.
I'm going camping, and I'm going to reread the New Market Wizards book.
I love it. Good call.
Yeah, I'm going to reread that. I haven't read it for about 10 years, and I know there's further editions of it. And I just reread The Intelligent Investor about 6 months back.
Did you?
It was just great just to, even if you know how to calculate a PE ratio and intrinsic value, extrinsic value, and book value and all that stuff, it was a wonderful read just to kind of, review and catch up and to get that thought going into your head again. So I'm going to reread New Market Wizards is what I'm going to reread.
The value growth debate. Yeah, I got the hint. I was wondering. Oh, I do miss our book club podcast. I got to tell you, we did those for years.
We still have it. We just don't do it very often.
We should bring it back.
It's called Shooting the Bull, right? And we released a Shooting the Bull on what was the last one we released? Shooting
in May. We did Trading Places.
Trading Places in May. So we'll have a Shooting the Bull coming up later in July. We'll do a Shooting Bull in July.
Sounds great. All right, guys. Podcast, by the way, last note on that. Podcast is up on the site. Go download it on iTunes. Make sure that you are getting that. Cody has an announcement here as well. Before
get over to that, Cody, take a look at the Tesla setup that we have over there.
I did a video on Tesla. It's on our Tackle Trading Instagram. Tonight's coaches show is module 4. The bullish breakout, so that Disney set up a lot of companies in the market, Matt, and learning those bullish breakout rules would be great. Tonight, join Coach Noah in the Coaches Show live if you're a pro member. And as always, if you're not a pro member, you can go get all of those modules. Module 5 being released on the step system today on bearish retracements, and get a 15-day trial. We always put a link in the chat. Matt, great job today.
Good job.
Cody, great job today. And we will see everybody tomorrow in Tackle Trading's Halftime Report. Peace out.